Good morning, good afternoon, good day. Welcome to my weekend market roundup, 13th November 2021. I am Sagar Nandi, retired IT professional, swing trading stocks using the Q systems and techniques that I developed. Here is my email ID, my website, YouTube channel, and Twitter handle. Disclaimer: this demonstration is for educational purposes only. I am not an investment advisor. It is not a trade recommendation. Trading involves risk. You and only you are solely responsible for the outcome of your trades. These are the Q systems I use. They are add-ons to the TradeStation and Metastock platforms. Let's continue with the live system, starting with a look at the global markets, starting with Australian market, all ordinaries index. In the weekly chart, the backdrop color is bullish, shape is also bullish. In the daily, it is continuing to be inside a range. If you remember my previous webinars, when price came to here, looking at the many indecision at the top and bear release, I thought price may go down and I thought of shorting individual stocks. That was 2 weeks ago. Then 1 week ago, price recovered but closed below the trendline resistance, and I mentioned that if we took the short trades, probably we would continue to hold the short trades because it might have been not stopped out, because the index also didn't stop out above the protection level. This week the weekly backdrop ended with a bullish color, bullish shape candle. However, price still could not close above the trendline resistance. So if one took a short trade at this point, probably one is still in that trade, and there is a chance that the individual stock trades hit the initial profit target, because we would not have shorted the index, we would have shorted weaker fundamental stocks with weaker technicals in weak industries. Another thing to note is that when we take reversal trades, as was in this case, the preferred instrument for me and for many other Q traders is not to short with a stock but to use verticals. In this case, short call vertical. If we took short call verticals when price initially reversed from the trendline resistance with so many indecision signals, by the time price came here for the index, probably the individual stocks would have given us some profit. Might not have hit the profit target, but might have given some profit. And if we took the trade as short put vertical by this week, which is 2 weeks after I first talked about shorting the Australian market, in that 2 weeks, time decay would favor the short vertical trade. Right now, we will neither take any long trade or short trade. It is at the upper edge of a sideways range. Therefore, if price comes down from here, and if someone didn't initiate a short trade already at the same price level, then there may be the next shorting opportunity in the coming week if price comes down from the same sideways range from the upper edge. It is moving sideways. Topics index, Japanese market. What about that? In the last webinar, I mentioned that for swing trading purposes, Topix was moving in an uptrend, and that view is continuing. It is continuing to have higher high, higher low. On Friday, we have a bullish flow as well. While the backdrop color is bullish, therefore on Friday we could look for long trades in individual stocks. Topics market, same state as in the previous weekend webinar, in an uptrend, and it has possible long opportunities right now in individual stocks. China CSI 300 index, it was moving sideways for a long time, and that is continuing. In spite of all the news out of China about Evergrande and whatnot, it's continuing to move in a sideways range. No trade here, no change from previous weekend webinar. FTSE market or UK market, FTSE index, also moving sideways inside wide triangle pattern, or you may say this is so wide triangle pattern, we may call it a box instead. Weekly is also inside a range. No change from previous weekend webinar. And lastly, India's Nifty 50 index. When the bearish headwind came, I alerted about the possibility of a pullback. Price did pull back from that top, and the backdrop color is still remaining bearish, though this week's candle shape is bullish. In the daily, after displaying indecision at the top and bear release, and weekly had bearish headwind at that time, price came down. At the swing low, it displayed bull release, price steadied, and on Friday, it actually has a bullish flow. It has higher low, higher high with a bullish flow. Therefore, in the daily, it is meeting all the requirements of a go with flow long trade setup. However, weekly is not meeting that. Weekly color is still magenta, so we don't have a go with flow long trade setup in the Nifty 50 index itself. If you looked into underlying stocks, fundamentally strong stocks, probably you would find some long trade setup on Friday. It is in an uptrend. No change from previous weekend webinar. So the global markets are remaining in the same state as we saw in the previous weekend webinar. A mixed picture. Some markets are sideways, some are in an uptrend. What about the USA market? In the previous weekend webinar, I showed that the market was bullish, no doubt about that. There were some concerns, but not bearish concern. They were indecision at the top or bearish headwind at the top. That is what I discussed in the previous weekend webinar on this day. This is SPY. This week, in the beginning, it came down, and then on Friday, it recovered. The weekly backdrop color is remaining bullish, and SPY backdrop is now bullish for 5 straight weeks. 1, 2, 3, 4, 5. The daily is yellow, not red anymore, not green yet. And you will see this pattern, that backdrop bullish for 5 weeks in color, and the daily neutral after making a swing low is common between most of the market ETFs. This is SPY. It is bullish in weekly, and now that it has created a swing low, it is bullish in daily as well. QQQ, 1, 2, 3, 4, 5. bullish backdrop in weekly for 5 weeks. This week's candle shape is mixed, color is bullish. This is the bearish headwind I pointed to in the previous webinar. After that, price pulled back, and similar to SPY, it now has created a swing low. Daily is yellow. 5 bullish backdrop weeks and daily yellow after making a swing low. Also, we have a bullish reversal at pendulum high. That is a bullish signal. In the master classes that I took recently on technical analysis using Q signals, I mentioned that when we have bullish reversal at pendulum high, we may be cautious. We may not rush into buying. However, in this case, the pattern is little bit different. Here we have a bullish reversal at pendulum high, but that is created after a swing low. So I would not mind taking some long positions at the close of Friday, just before the close of Friday, because the bullish reversal along with the swing low in daily and the weekly shape, not shape so much, but the weekly color is looking bullish enough to take a long trade. And if I look at dia, again the weekly backdrop bullish for 5 weeks in a row, and the shape is not bullish like SPY, not neutral like QQQ. The shape is probably more bearish than bullish, but the backdrop color is still bullish. It did display a bearish headwind near the top, which followed an indecision at the top, which was followed by a bear release. However, after that, it seems to have created a swing low and the daily color has changed to neutral. Same pattern, 5 bullish backdrop weeks, daily neutral after creating a swing low. And if I look at the last market ETF, IWM, same weekly pattern, 5 bullish backdrop weeks in a row. The weekly shape is mixed. In daily, here we have 2 days in a row with weekly color. It's not red anymore. IWM has also created a swing low and has gone up on Thursday, Friday. Though the volume is low, we can see from the green colors of Thursday and Friday's candles activity bars, not candles, activity bars, that price went up on both Thursday, Friday. Because all the market ETFs have created swing low and gone up, it is not unreasonable to take some long trades. At the same time, if we look at the shape of the weekly candles, many of the market ETFs are not showing a bullish candle shape. So IWM not bullish, indecisive, dia indecisive, QQQ indecisive, SPY you may say indecisive as well. So all the market ETFs in daily, there is a reason to take a long trade. The weekly is telling that better not do that. That is the market ETF level view. If we go to individual stocks and check their industries, probably there were some low risk buying opportunities on Friday. We look at some of them. Let's see if we can find more information from other angles that will help us decide right now should we be bullish or bearish or stand aside. So far the global markets and market ETFs are telling that neither bullish nor bearish, may be better to stand aside when we mix weekly daily together. Let's look at market breadth in terms of sector, industry, stock, advance, decline. One month to 1 day, sector, industry, stock, advanced decline breadth. 1 month and 10 day. The two longer term periods are undoubtedly bullish. No question about that. The shorter term periods, 1 day and 2 day, are also bullish, more bullish than bearish. We have to say it is bullish. And the weekly period, 5 day period, the sectors are bearish, however, industry and stocks are mixed. So overall, we have to say the weekly period is also mixed. So the week is mixed, longer term bullish, shorter term 1 day, 2 day periods are also bullish. Where will it go next? Not easy to anticipate that. It may go either way. When this picture is at an extreme, then it is easier to anticipate a reversal. But now it is giving a mixed picture. 5 day is balanced, and on both sides of 5 day period we have bullish picture. Will it go to upward or downward? We don't know. The same indecision that we saw when looking at the ETFs. The weekly has one picture and daily, in this case daily and 2 day, they have different picture. If I look at the bucket analysis, looking for extreme condition, not there. The percentage of stocks in the uppermost bucket above Bollinger Band is only 5.8%. The extreme level is 30-40%. And now we see the value of looking at the bucket analysis every day. When it reached 30%, I mentioned that in a tweet right on that day, that the uppermost bucket has hit 30%. And if you followed the market since then, that was the top, the swing high. From there, market gradually came down. And the percentage of stocks above upper Bollinger Band for S&P 1500 hit 30% and maybe a little bit above 30% also, and then went all downhill from there, now hitting only 5.8%. So tracking the percentage in the uppermost bucket was very helpful. In what way? We would not have taken many long trades at that time, at least not in stocks that were overbought and overvalued. Very helpful insight indeed. Right now it has come down, not an extreme condition. And is it bullish or bearish? We can see that from the percentage of stocks above mid Bollinger Band, 70%, that is bullish. No change from Thursday. And we can also see the bullishness from the area of the green bars, which is much more than the area of the red bars. So on Thursday and Friday both, looking at the bucket analysis, we know market is bullish. The 5 day period we saw from sector, industry, stock, advanced decline breadth was bearish. Thursday and Friday were bullish. No extra insight from here regarding where the market may go next, meaning where should we look for trades, bullish direction or bearish direction. But we still have few more analysis to do to see if we can gather additional insight. Let's look at technical breadth. The weekly interval balance between bears and bulls using Q finder. All signal, mixed picture. Trend continuation, mixed picture. Strength signal, bullish, 66%. Reversal, bearish, almost the same percentage, 68%. So they nullify each other. We are left with all signals, trend continuation signals, that is neutral, indecisive. We don't have any decision from here whether to look for long trades or short trades. However, when I look at the percentage of stocks displaying bearish headwind in the weekly interval, and remember I mentioned it in the previous webinar that though there were some indecision signals in individual stocks ETFs in the previous webinar, including a bearish headwind in QQQ in daily, we did not have more than 1% of stocks displaying bearish headwind in the weekly interval. That was in the previous webinar. This weekend though, that percentage has gone above 1%. It is at 1.1%. So from this angle, I will be ready to take some short trades, provided I have low risk short opportunities in the daily interval in individual stocks. But the bearish headwind is telling that now it is time to look for short trades. Looking at the weekly picture, what about daily picture? Daily picture is bullish though. Friday was bullish, that is reflected in sector industry stock advance decline, and that is also reflected in the Q Finder technical breadth across thousands of stocks. All signals bullish, strength bullish, trend continuation bullish, even reversal is bullish. So now we have a dilemma. The weekly is telling that it is time to be ready for shorting, but daily is telling everything is bullish. What to do? What to do is this for me, that based on the market ETFs creating swing low in daily, but weekly is indecisive, and the technical breadth is bullish on Friday, I would not mind taking some long trades on Friday. At the same time, looking at the indecision candles in weekly market ETFs, looking at the indecision in technical breadth weekly interval, and looking at the percentage of bearish headwinds in the weekly interval, I will be ready to take short trades if this swing low that is created that fails to go up much and it creates a lower high. So we have now the market ETFs in a pattern like this. Let me draw this on a whiteboard. Market ETFs made new high, displayed some indecision at the top and pulled back, created a swing low at this point. However, the weekly interval has a large number of bearish headwinds, weekly intervals. So that is telling me to look for short. The daily interval, both for market ETFs as well as technical breadth, is telling me to go for long. So I might have taken some long trades on Friday. However, the moment I see that price stalls, that was yellow color, maybe I change to black color, price stalls and starts to come down, that will give me optimal shorting point, because weekly already has bearish headwind, many of them. Now if this up move stalls and comes down with a lower high, I need a lower high to be more confident to take some short trades here. So I will look for that, and if those shorting opportunities come true, then I will be quick to book profit in the long trades I might have taken on Friday. Either book profit or at least apply trailing stop so that the winning trades don't turn into a losing trade by a market reversal. So I am okay to go long on Friday, and I will be ready to look for short trades in the coming week. That is how I am interpreting the market level analysis. However, we have not finished the market level analysis yet. We still have to look at the market internals, and that may also be inconclusive. So far, whatever I have seen is not much conclusive. Let's see if market internals give us more insight. First, look at the market internals using very broad analysis, Nasdaq and NYSE as a whole. This is using Q Global Market Breadth. First, I look at the percentage of stocks. Where is my drawing tool? Percentage of stocks above 50-day moving average. For Nasdaq, it is right at 50%. For NYSE, it is at 60%. So NYSE is continuing to be 10% more bullish from this angle. And this exact 10% difference is remaining. I think this is for the third week in a row. NYSE is continuing to remain 10% more bullish than Nasdaq in terms of percentage of stocks above 50-day moving average. And Nasdaq did pull back little bit to the midpoint, 50%. NYSE is at 60% above the midpoint of 50%. However, both of them are in an uptrend and above the average line. So overall, they are still bullish. And if you look carefully, if I delete the drawn lines, there are many insights you can glean from the Q Global Market Breadth. The more you study, the more you watch them. It is in front of our eyes, but the more we look at them every day, the more things we discover. After quite a long time, after this long time, now the three breadth analysis, percentage of stocks above 50 MA, percentage of stocks above 200 MA, and percentage of stocks where 50 MA above 200 MA, they are in the bullish order. So yellow is above white, white is above orange. That is true for both Nasdaq and NYSE. Yellow above white, white above orange. That is a bullish formation. So from this angle, the market breadth is bullish. Not only from the yellow line, the relation of yellow line with white line and orange line, in both ways, the market is looking bullish, and this is very broad analysis. I mentioned about the 3-month new high low, I think in the previous webinar, when it was at the extreme level. These two horizontal lines at the upper end. And I mentioned whenever 3-month new high low hits the extreme higher level, it tends to pull back. That happened both for NYSE and Nasdaq, and happened more for Nasdaq. And we saw from the yellow line also that Nasdaq is weaker than NYSE. We see that weakness from 3-month new high low also. 3-month new high low for Nasdaq pulled back much deeper than NYSE. And though they pulled back, not that the market came down so much. And this is exactly what I mentioned in the previous webinar also, that because 3-month new high low was at an extreme level or near an extreme level, I was expecting the 3-month high low to come down, but that did not mean the market will necessarily come down. Some stocks must have come down from very high level, or you may also say some stocks that were at a low level came down further. That is what is represented by 3-month new high low. Either the new highs come down or the new lows go up. In either case, Nasdaq showed more weakness than NYSE, and on Friday they both put up little bit. This is in line with the market ETFs creating swing low on Friday. Overall, we have to say this picture is bullish. And if I change to weekly interval, earlier I showed that there were bearish divergence in both NYSE and Nasdaq, advanced decline, up down volume. And in the previous webinar, I mentioned that the bearish divergence for NYSE was less pronounced than Nasdaq. So Nasdaq was showing weakness at that time also. And this week I see that up down volume for Nasdaq has gone up. So the bearish divergence that we saw 2 weeks ago, it was still there 1 week ago in Nasdaq. In NYSE, it reduced 1 week ago. And this week, even for Nasdaq, it has reduced, especially in terms of up-down volume. We cannot say for up-down volume, we have a bearish divergence for Nasdaq because, let me redraw the lines, the current week's peak is higher than the previous peak. So we don't have a bearish divergence in up-down volume anymore. Advanced decline still has bearish divergence, but not that pronounced anymore. From here to here, it was much more pronounced. Now it is less pronounced. We'll see if market goes up or down next week, but this picture, both weekly and daily combined, it is showing two things. Firstly, it is bullish overall right now, and secondly, it became more bullish than 1 week ago or 2 weeks ago in terms of divergence. Now let's look at mega caps. How did mega caps do? Mega cap top 20 custom index. Some time ago, the mega cap top 20 was inside a triangle pattern. In this area, it broke out of the triangle pattern, went to the upper boundary, pulled back, hit the memory trendline support, and went up with a bullish flow. Not only bullish traffic, but bullish flow shown in the ribbon. Therefore, if we were looking to buy mega caps, we could be ready on Thursday or Wednesday, one of these 2 days, Thursday, Wednesday, and we could buy them on Friday. Friday is decidedly bullish for mega cap top 20. And if I look at mega cap top 20, let's do that using at a glance template. The weekly backdrop is bullish. Daily has trendline support, bullish flow. In fact, we have a bullish reversal here also on Friday. And this is not one stock, this is the custom index, mega cap top 20, mega cap as a whole. That is looking quite bullish, isn't it? The bullish reversal itself after a swing low with bullish flow, bullish backdrop, that is looking bullish enough to take a long trade. The weekly shape is indecisive, but that is fine. If you remember the go with flow checklist, it does not need the weekly to be bullish shape, it just needs the backdrop to be bullish color in weekly. So that is meeting all the checklist conditions. So Friday was a reason to look for buying mega caps. And lastly, let's look at market breadth total view that combines the insight from 2 exchanges as a whole and 4 major indices. Look at the market breadth using moving averages. Percentage of stocks above 50 MA for market as a whole is even stronger than NYSE. So it's above 65%, and the yellow line is above white line is above orange line. They are in proper bullish order. The yellow line is clearly in an uptrend, well above midpoint 50% level, well above the average line. So market breadth total view is bullish. There is no bearish signal at all here. The 3-month new high low was at an extreme in the previous weekend webinar. I pointed to that. It pulled back quite sharply, shown by this red dot. Whenever this red dot comes, it means the drop in a single day was more than 20% in 3-month new high low. So it had a sharp pullback and Friday it went up again in sync with all the market ETFs creating swing low on Friday. This market breadth total view is also looking bullish. There is no sign of bearishness. There is no distribution count. There is no Hindenburg. There is no Phoenix. There is no bingo. Those are all bearish signals coming on this market breadth total view, and they didn't come. Not only that they didn't come on Friday, they didn't come for a long time. So market breadth total view is bullish. What kind of stock is in favor? Growth versus value. The magenta line is uptrending, so growth is doing better than value. Small cap versus large cap. If we see last couple of days, maybe 1 or 2 weeks, it's going up as well. But if we see longer term period, it's not going anywhere. Immediate past, it is doing better, going up. That means small cap is doing better than large cap. We saw mega caps had a long opportunity probably on Friday. Overall for the week we see small caps did better than large cap, not necessarily mega caps here. This is talking about small cap versus large cap. Looking at the right edge though, it seems that small cap versus large cap is rolling over. So if I was going to look for buying opportunities on Friday, maybe small cap would not be the right choice. It seems to be rolling over. Has not rolled over yet, but seems to be rolling over. Whereas growth versus value is continuing in a clear uptrend. So growth will be favored. That is from market level analysis. No bearish signal, bullish signals, and that is why now I completed the full analysis. I'm doing it live, didn't do it before, but my anticipation or announcement that it would be alright to look for some buying opportunities on Friday, that seems to be supported by the complete analysis. However, looking at the weekly indecision and large number of bearish headwinds, I will watch the long positions carefully. Now, let's look at, we have some time. I mentioned in Twitter, I will show how to anticipate trades. Let me try to do that. When we say we are anticipating a trade, mostly it means that we are anticipating it from a technical point of view, not from fundamental point of view. Fundamental does not change so often, and we cannot anticipate earnings result. We cannot anticipate how relative valuation of a stock may change. We can anticipate though if technicals are approaching a buy point, and a similar anticipation may be done on the short side, but I will discuss only the long direction today. The other thing then we may anticipate is industry strength changing over time. So if an industry is accelerating, we may anticipate that it will be one of the strongest industries soon. Therefore, using Q systems, when I talk about anticipating a trend, it may be in terms of industry being strong, an industry that was weaker earlier, or it can be in terms of technicals coming to a proper buy point. Because Q systems has all these dimensions, we can analyze them in 100% real time. When I anticipate a trade, I look at both industry and technicals. Let's look at technicals first. Technically, I may anticipate a headwind trade if I see a stock is coming down. It is Let me draw with a different line. Let's say it is below lower boundary line. No, let me use black color. It's below lower boundary line and it is coming down, and let's say the stock is fundamentally strong, and I should reinforce that statement. I am anticipating a long trade only in stocks that are fundamentally strong. I am not anticipating or trying to anticipate a trade in a weak fundamental stock, not in the wrong direction. So I know which stocks are fundamentally strong. Some of them may come down. When they come down and they are already below lower boundary, I may anticipate a reversal in terms of a bullish headwind. So I may look for a bullish headwind reversals trade in a stock like that. That is anticipating a long trend. If the stock was already in an uptrend, then it pulled back little bit, not deep pullback, but pulled back little bit. It may still be coming down, but I am going to anticipate a go with flow long trade coming soon at this point with a bullish flow candle. If the stock was in an uptrend and it pulled back more than usual for a go with flow long trade, and it is coming near the, let me try to draw with yellow line. I know it is not very clear. It's coming near the yellow direction line. It might not have turned up yet. It is coming near the yellow line. Then I am going to look for a pullback long trade setup. Don't need a cyan color candle for that. I will be happy to have a green color candle. So I may anticipate a pullback setup in that case. Stock in an uptrend, pulling back more than usual in a go with flow case and coming to yellow direction line. And if it is moving inside a range, in a way that it is inside a triangle pattern, again the stock is a fundamentally strong stock, only then I am anticipating long trades. Then I am anticipating a breakout trade at this point, and most likely that will be a green candle, maybe a cyan candle also, but I am already starting to anticipate a breakout trade in such a case. If a stock is fundamentally strong and it is moving inside a range, sometimes maybe creating false breakout, when it is coming near the lower edge of the range, that is the watermark support level, it might not have gone up yet, but I am already starting to anticipate a box long trade setup. And box long trade setup, I should have at least a yellow candle, but let me draw that with blue so that you can see. I am already starting to anticipate even before the candle actually goes up from watermark support. So for all the Q trade setups, whether it is headwind or go with flow or pullback or breakout or box, and the same will be true for bounce also. A stock that was in an uptrend fell sharp. Okay, let me change the color. Black color, was in an uptrend, fell sharply, hit a pre-existing trend line support. It is approaching the trend line support. It might not have bounced yet. I am already starting to look for a long trend and it doesn't matter even if the candle is red color, we have a valid bounce long trade setup. So 1 2 3 4 5 6 6 trade setups, 6 distinct market conditions, only one trade setup for each market condition, and I am able to anticipate all these trades and be ready. What does it mean by being ready? To think, not think really, to look at the volatility of, no, not volatility, let me refresh. What does it mean to anticipate? That is to look at the liquidity of the stock, the bid-ask spread, then look at its options, look at the bid-ask spread of the options legs that I would consider using. If the options legs are not having wide bid-ask spread, I may favor an options trade. If the option spread is wide, I may look at the stock bid-ask spread. If that is also wide, then I may not trade the stock. So all these things I may decide beforehand. For stocks, it is easier, but still I will have to check the liquidity of the stock itself to see if the bid-ask spread currently is wide, then decide my risk tolerance, how many stocks I am going to buy. I will be ready with all those things. All those questions will be answered. I will log them in the diary also as a plan, so that when the trade setup is confirmed, be it headwind, any of them, headwind, depending on which situation the stock is in, I'm ready with the trade setup. So when the trade setup is confirmed, I trigger my trade. So I can anticipate. This is in terms of fundament. No, sorry, not for this is in terms of technicals. And in terms of industry, if an industry is weak for a long time, and now let's go to QH. Let's look at the industries, and I'm going to sort the industries by acceleration, not with strength, but with acceleration. Let's use the 1-day acceleration pace column. I will look at the top 20% of the industries. These are these industries. They were weaker earlier, but they are accelerating fast. And you can see many of them are in magenta color for a long time. This one, for example, education services. This one, for example, data processing and outsourced services. This one, tobacco. The last one, diversified support services. These were weak for a long time and now they are showing signs of strength. So if I'm anticipating trades, then instead of looking at the industries based on strength, and I like to buy stocks in top 20% of industries, if I'm anticipating, then I may look for top 20% accelerating industries. Then drill down to the underlying stocks and get ready to buy some of them. And because the industry is accelerating, that means at least some of the stocks are starting to go up, not all of them. If all the stocks in these accelerating industries are going up, then they will be among the strongest industries as well. And you may see, okay, let me highlight this few. Can you see some of them, like this industry, this industry, this industry, this, okay, 1 2 3 4 5 industries. They are not only the most accelerating but among the top 20% industries right now, and the all other industries that are accelerating, if the acceleration continues, they will be among the top 20% in a few days. So we can anticipate a trade in these industries in advance. So we may look at the top 20%. Again, let's look at the top 20% accelerating industries. Let's drill down to the stocks. For now, for saving time, I'm just drilling down to the S&P 1500 stocks. And now let's look at crown jewels, the best of the best fundamentals, and you see some of them are already starting to go up. I may look at stocks that went up on a day, and I may do this analysis on a daily basis. You may do that also if you like to anticipate a trade. But fundamentals is not anticipation. We are, at least I am, always looking for fundamentally strong stocks, and I chose crown jewels, the strongest of the strongest fundamentals, undervalued with high earnings growth, with high revenue growth. Several of them went up by more than 1% on Friday. Now I may look at them and see if they are giving a trade setup. Then I'll be able to find a trade based on industry strength anticipation. It's accelerating, but the industry may not be strong yet. We may look at these stocks, but instead of that, let me continue on the technical side and explain how I carry that out. Let's look at a stock I shared earlier, AU, and I will elaborate on a few more things. If you are following me on YouTube, Twitter, then you know that after this sharp drop, when we had the bullish headwind, bull release, then the bullish backdrop, somewhere during this reversal, right at the very bottom, I switched to daily and identified a long trade right at this point, one of these 2 days. And that time, AU, the gold miner, was one of the strongest fundamental stocks in the industry. The industry was also showing signs of strength. So I bought the stock, then it went up. As the stock went up, it was not undervalued anymore. That is normal. But fundamentals, okay, the relative valuation changes. That's why it was not undervalued anymore. That is normal. But the stock was still one of the strongest in the industry. So when it pulled back, I could anticipate a long trade because it displayed multiple indecision at the bottom. In fact, 3 in a row on the daily candles, then a bull release, then a bullish shape candle. And right when the bullish shape candle came, that was my last weekend webinar. Right on that day, I suggested that we had a buying opportunity, and I could anticipate the stock going up because it was in a strong uptrend prior to that, had a shallow pullback. If you see the weekly chart, it held on to the direction lines, and we could say this was the boss direction line. So far the way it is acting, so it held on to the direction lines, created a bullish shape candle in weekly. The backdrop color never changed to even yellow in spite of a drop 1 week ago, and then we had a bullish shape candle. So the stop would be minimum. That was the entry point, and right after that price jumped up, covered much more than the risk distance, and we could book in fact partial profit on this day itself. So that was a stock where you could anticipate a trade because you already traded it. It was in a strong uptrend, and you could follow how it moved in the backdrop weekly chart, how it was moving on the daily chart, how it was holding on to the boss line, how it was not changing backdrop to yellow. With all that and the bullish shape candle in daily, you could buy it right at the close of previous Friday 1 week ago. That is one way you can anticipate a trade because you already traded it before and it was continuing to be in a robust uptrend. Another stock that I shared in the forum, I think on Friday. Let's look at the forum on my website saganandi.com. I share live ideas under this category, 360-degree trading ideas and techniques. Let's look at the last post. Why I am showing you the last post is to explain using live market analysis. So this is what I shared on Friday at 9:57 a.m. Therefore, in the morning session, all my times are in Eastern time zone, within half an hour of market open, let's say around 10 o'clock. This was on GPS, the stock gaps, and see the snapshots, what I explained in terms of industry anticipation right now. I used that when I posted this idea. The industry was accelerating in the morning session using real-time analysis. One of the most accelerating industries, and I like to buy, when I use acceleration, I like to buy or anticipate a trend or buy both in the top 20% accelerating industries, and apparel retail was one of them, top 20% accelerating industries. If you look at strength, it was not so strong, certainly not among the top 20 strongest industries, but it was top 20% accelerating industries. So I'm anticipating a move in the industry, and then I looked at the stock's fundamentals. Fundamentals, I need it to be strong. Valuation undervalued, fantastic earnings growth, respectable revenue growth, short squeeze potential. So it is a crown jewel plus a short squeeze potential. And you see, though the industry was not among the top 20% strongest industries in itself, the industry was very strong. 72% of apparel retail peer stocks were up. So the industry was strong. Crown jewel, short squeeze potential in itself, strong industry. And then I looked at seasonality. November is bullish seasonality overall for the market also, and this stock also not 80% but bullish seasonality, 70% bullish. Another thing to note that though average when up is 9.3%, there were several years where it went up and sometimes significantly above that average when up. Average went up 9.3%, but we see years when it went up by 24%, even 35%. So seasonality was also in favor. And then I looked at the technicals. Remember the AU, gold miner, that also had a down move. Then AU changed color to yellow and then to cyan. The same thing happened to GPS 1 week ago. It also displayed indecision at the bottom, then a bull release 1 week ago, and this week the backdrop color was remaining bullish. So we had a long down move, backdrop color turned to bullish, then an indecisive signal. Where will it go next? We see the bullish backdrop, first bullish backdrop after the down move also happened with bullish pressure. So if I have to anticipate, I'll anticipate the next move to be upside. And in the daily, if I see, the last few pressures are on the bullish side. It was in a downtrend, then it went up, now moving sideways. Friday's candle shape is bullish, however there is a trend line resistance. So what I mentioned in this post, that if we have a break above this trend line resistance, then the downtrend will be broken. Weekly backdrop is already bullish for 2 weeks. We'll have a breakout trading opportunity right at the point of the memory breakout. This is how I am anticipating a trade, and might have placed a I might have placed an order already on the brokerage, that if it is going above the trend line resistance, buy this many stocks based on my risk tolerance. I use the Q diary for that, and I have also set the one trigger OCO. So the stop loss order and the profit trading order. In fact, I have placed one triggers 2 OCO. So I have same stop loss for two orders, and two profit targets. Stop loss is same, but one profit target is when risk resistance is covered, let's say somewhere here, and the next profit target somewhere probably near the watermark resistance. So I have everything set up in the brokerage. If it hits and goes above the trend line resistance, they will be triggered. I'll be filled unless it is a large gap up. I have put a stop limit order at the trend line resistance. If it is a large gap up, it will not be filled. Otherwise, it will be filled and it will trigger two OCOs. One, booking profit at distance where reward equal to risk, and stop loss order at the protection signal level. Another, remaining position profit booking order at a higher level near the watermark resistance, slightly below that. I don't want to try to get the last dollar out of it. Little bit below that is fine, and at the same stop loss order, stop loss level. So one trigger, two OCO. These orders are very much possible, and most traders, experienced traders, use them so that we don't have to be in a hurry in placing the order, especially in a breakout trade. When it is coming down to catch a swing low, we may have to know based on the chart where the swing low will be. So the entry price is not known beforehand, but for a breakout trade, the entry price is almost always known. Of course, if you are able to watch the stock during market hours, you could use fine-tune chart to see if it is breaking out of the daily trendline resistance and switch to fine-tune 5-minute, 10-minute interval chart to precisely enter it. Or if you are busy or don't want to watch intraday charts, you could place this one trigger, two OCO, or maybe one OCO if you have only one profit target stop loss. So GPS is a stock where I'm anticipating a breakout trend, but I will not like to buy it based on the anticipation. I have calculated everything, I have placed my order, but I will not buy it unless I see the breakout actually happening. That's how I have set it up. And you see the anticipation here is based on the technicals as well as on the industry which is accelerating. Fundamentals, as I said, I need that to be strong, only then I'll anticipate a trend. And let me now share, I think, one last stock example. We are beyond 1 hour point, but give me a few more minutes. The same concept could be applied to this stock. And you might have taken a long position in this stock on Friday itself. In GPS, or at least I am still tracking it, but let's see this stock, KLIC. I have taken a position in it on Friday and I was anticipating the trade beforehand, just like I am still anticipating in GPS. See the common thing between the two stocks, they are fundamentally very strong. Undervalued stock, fantastic earnings growth, actually very high revenue growth. On top of that, a short squeeze potential. 91% of industry peers were up on Friday, and here funds are also bullish. This is even stronger in terms of fundamentals than GPS. See how the year-on-year quarterly earnings growth and revenue growth are going up. Fundamentals leave nothing to be desired, I may say that. Crown jewel, short squeeze potential, earnings quality, secondary valuation, funds, all the relevant information is bullish, steadily going up. Earnings is 17th November. That is one thing you may keep in mind and trade accordingly, manage your risk accordingly, or decide to take a long-term position. Use the instrument, choose the instrument properly. So the fundamentals are very strong. If I look at the industry relative strength, it is already strong. So we didn't have to anticipate the industry strength like I am doing for GPS. For KLIC, industry is already strong, fundamental strong. Now let's look at the technicals. And again, you will see the similarity, and that is why I tend to say and show with live examples that you are able to buy these stocks at the best price well before probably IBD style will allow you to buy, because IBD has a very robust technique, but they need a stock to be in a strong uptrend, create a base before they allow you to enter from the base breakout. So it is already up by a significant percentage, but here you see it dropped significantly. Look at the similarity between this stock, how I described GPS, and before that how I described the gold mining stock AU. Sharp down move, backdrop was bearish. Then we have a bull release, backdrop turned to yellow. We have multiple indecision signals. Backdrop remained yellow, and this is the first week. Backdrop is turning bullish. The shape is also bullish. Remember in the master classes I mentioned, if you have a fundamentally strong stock you want to buy anyway, let it come down. No need to chase it. All strong stocks also come down. Then wait for the backdrop to turn bullish again and let the shape also be bullish, and that is the time switch to daily chart to look for a buying opportunity. When the weekly was coming down, daily was also coming down. Interestingly, I see a bullish headwind right near the top. Interestingly, I see a bearish headwind right near the top. It had a sharp drop, then it recovered, then it moved sideways. This pattern, this sideways pattern after this down move is very similar to, I should say, this sideways pattern after the down move and a recovery is very similar to what is happening in GPS. What is different from GPS is that it has already broken out of the trendline resistance, though there is a watermark resistance that is so close that you might take a long position on Friday, or you might place a buy order above the high of Friday's price. You could do that. I think you could do either. Very strong fundamentals, very strong industry, a decent recovery, sideways move when it went into Q squeeze, and a breakout from that. You could take a long position on Friday, or you could take a long position on Monday next week if it continues to go up. In the alternate chart, we have some additional insight, that is it hit the low jump both in jump and thrust. When we have low jump, low thrust, magenta dots, red dots mean it is approaching low jump, low thrust, magenta means it has hit low jump, low thrust, we would expect a recovery. And after the sideways move, it seems to be going up again with a Mobo breakout and a Kahuna. This is another stock where fundamentals were strong. It pulled back and we could anticipate a breakout trend when it was moving sideways, and the breakout has happened technically on Friday. Weekly is looking bearish. That is how I anticipate trades and take them at the most opportune moment. Doesn't mean that every such trade will make profit, but that is the lowest risk entry opportunity in a strong fundamental stock in an industry that is either strong already or accelerating. And I think if you have not done this before, you may follow this approach so that you are ready to place a trade beforehand. You don't have to second guess, don't have to read what others are talking about the stock. You will be able to confidently place the trade probably in your broker beforehand. And some brokers allow you to place option trades based on price hitting, stock price hitting a particular level. So you could do this order placing not only for stocks but for options as well. Just make sure that broker, the one you are using, does not place a market order on options when your stock price hits the entry trigger. That was what I wanted to share. I take advantage of these webinars to share more and more detail how you can use Q systems to your advantage. I shared how do I at least anticipate trades and trigger them at the most opportune moment. That's all for today. Thanks for joining. I look forward to seeing you in my next public webinar that will be next weekend. For the next master class, I have not prepared yet. Once I prepare on the Q scans, I will announce the timeline to the people who have registered. Thanks once again. Have a great weekend. And as I always say, as I always show using the live examples, there is absolutely no reason not to do that. Trade profitably. Thank you.